Welcome to Pioneer Mindset, a place where we challenge our mindset and address the discomfort in both business and life by finding clarity resulting in bold conviction. I'm your host, Garrett Ruskamp, fifth generation farmer, husband, and father from rural Nebraska. Whether you're navigating frustration from past decisions or worry about the uncertainty you face today in your business, we're going to learn from our struggles and take on new challenges with a resilient mindset. Join me as I share my journey of struggles I faced in agriculture as a farmer and family man. I'm ready to dive into honest conversations to tackle the mindsets surrounding key issues that rural ag business owners face that will ultimately help you gain control, leading to a profitable and sustainable business. Let's adapt to Pioneer Mindset and get to it. Welcome back, everyone, to this week's episode of Pioneer Mindset. So as we get into basically the end of the year, looking at the end of 2025, by the time you hear this, we're probably going to be in the last month of 2025 into December. It's crazy how fast this year is flying, like every year does, right? We always say, man, time flies so much, so fast. And especially as you get older, it seems like it goes faster and faster. Well, this is nothing new, folks. We all know this. And so as we focus at the end of the year, rounding out 2025, just want to think about what can we do to kind of prepare for the end of the year, right? What's some things that we need to do not to forget about everything that's on our to-do list, right? From a business standpoint, what are some things that we need to make sure that we're getting done to finish the year strong, right? To make sure we can finish this year strong. No matter what happened 11 months ahead of time, let's make sure that we can do our best to finish this last month strong. But really, as we think about, as we get into the last month of the year, into December, everything that needs to be done, a lot of times from a business standpoint, whether it be an accounting standpoint, keeping track of books, creating that tax plan, prioritizing all of our tasks, all these things that we're going to kind of dive into one-on-one here. But the big thing here is, unfortunately, kind of what happens is basically how the rest of 2025 plays out, how the rest of this last month plays out, the next 30 days. A good portion of that's probably going to depend on how the previous 11 months played out, right? And everything we did prior to this. And so we can't necessarily change that to this point. We got to kind of acknowledge everything that's in front of us, how everything went. Did we stay consistent with our books? Did we stay updated throughout the year? Did we do everything? Or are we just kind of playing catch up? Right now, we're literally just trying to play catch up from the last 11 months. That might be the case, right? So we just have to acknowledge what's in front of us right now and do the best that we can to finish this year strong. So just want to make sure that there's things that we're not forgetting about. And so that's the big thing I want to talk about here is how can you finish strong here when it comes to the business side of things? What can we make sure that we're focusing on so that way we can do our best to keep all of our finances organized and to do our best to finish strong, but going to 2026 strong as well. Have that good start to the year. All right. So we're going to kind of dive into, I'd say, about 5 different areas here when it comes to the business side of things. And just a real quick rundown is we're going to talk about making sure our books are updated, specifically kind of our accounting system, making sure our balance sheet is updated and accurate, building that tax plan, but then also prioritizing our tasks and then building that kind of a after action report. So that's kind of the 5 different areas that we're going to focus on within this episode. And the reason why we want to do this, but I want to kind of always establish that why, so that way it gives you a reason to listen to this and listen to me talk about all these things, is just to make sure that we're being proactive, to make sure that we're doing the best that we can to control these things, right? To control the things that we can actually control, because there's so much that's out of our control. So as human beings, as business owners, we want to do the best that we can to control what we can, right? Control the controllables. Okay, so that's a big part of why we want to do this, but then also to reduce stress, right? To make sure that we're just acknowledging there's so much to do within the next 30 days, and a lot of busyness comes in because maybe it's family activities. The weekends are full with Christmas concerts throughout the week, and all these things are just kind of filling up our calendar. December is such a busy month. We want to make sure that we're not forgetting anything, making sure we're trying to do the best we can, reduce the stress, but then also, enjoy this time of year, right? Enjoy the holidays. We get pretty overloaded with all the stress and everything that needs to be done that we don't usually enjoy it. So let's make sure we can kind of stay on top of these tasks, so we can enjoy this time of year and kind of enjoy being around family, but enjoy the business side of it as well. So we're not getting overwhelmed. So let's dive into this. Okay, so to start, the first one here is going to be pretty obvious. And that's the thing with all of these things is it might be a little bit obvious, but at the same time, we want to make sure that there's things that we're not forgetting about because all the things that add up on our to-do list, right? So the first one here is going to be making sure that we're updating our books. Sounds pretty self-explanatory, right? You're like, Garrett, stop telling me to update my books. I know that. I know that I need to do this. All right. Well, I'm going to ask you right now, are they updated? Yes or no? And the question is it a yes or no? And generally the answer is, well, for the most part, or they're updated today. That's what we want to get to, is making sure that we're updating them with the best information that we have. So when I'm saying books, in this example, I'm saying specifically like our accounting system, our books, our previous books, making sure we're reconciling all of our accounts. Maybe if you're using a QuickBooks system, making sure that everything's entered in properly, make sure everything's accurate, up to date. And a couple of those things that we generally tend to forget about are maybe like our accounts payable and our accounts receivable. Now, those are all either the bills that are coming in that we need to pay and all the bills that are going out that need to be collected on, right? Or maybe all the invoices that we're sending out, right? And so those are the things that tend to be forget about or tend to get overlapped. Maybe I've updated as of November 1st, right? Maybe it's November 1st, maybe it's end of November. I've gotten this month updated. I've stayed up to date. And usually within the first week, if you're trying to build out some sort of pattern or to stay consistent as to when you're updating your books and be able to kind of go back and actually reconcile that, making sure that you're staying consistent with that. But sometimes there's a lot of those things that maybe overlap, or maybe you sent out the invoice, but it doesn't come in until next month, or maybe you got the check, but you don't deposit it till next month. And so there's a lot of those things that kind of tend to get overlapped, or maybe you get the bill and you're not going to pay it till next month, or maybe you only paid half of it, or maybe you were prepaying expenses. There's so much changing that it's really hard to maybe stay on top of some of those things. But the big reminder here is that when we're keeping track of our books, and like I said, whether it's a QuickBooks system, maybe it's an Excel spreadsheet, maybe it's like another accounting system that you use. The big thing here is just to find something that works for you. And obviously at this point, let's hope you had something in place for the previous 11 months, right? If we're just playing catch up and we're trying to do everything right now, it's going to be pretty overwhelming. But the thing is, we got to tackle it. Whatever we got to deal with, we got to take that head on, right? And so making sure that we're keeping track of this in a cash basis. When it comes to an accounting system, there's basically two different types. And I'm not going to try to get too into the weeds, but there's cash and there's accrual. So cash is just like it sounds. Anything that's come in and out of your account, all the transactions that have been made. The accrual is on a different standpoint when we're trying to keep track of, say, an invoice that was sent out but not paid. That's kind of keeping track of that. Now, that's important. We'll get into that. But the way that my mind kind of associates this with, just to kind of break this down into simple terms, like a layman's terms, so you as a farmer can understand it, is when it comes to cash, it's everything that comes in and out of your account, the transactions that have happened. Now, accrual, just to get a better understanding of that, for me, it's more of like, say, the balance sheet, right? The balance sheet, you're going to keep track of everything that's coming in yet. Maybe it's sent out, maybe your accounts receivable, accounts payable. You're going to keep track of that on maybe like in more of a balance sheet form, okay? But from an accounting standpoint, keeping track of the books, making sure our account has the information that they need, we're going to keep track of things from a cash standpoint. We want to know everything that's coming in and out, all the transactions that are done with, okay? And why we want to know that is jumping ahead is to get into the tax plan. Just kind of really help us keep track of all of the information, everything that's happened within our businesses, keeping them separate, making sure that they're organized, and everything that's happened thus far, 2025 year to date. So that's the big one there. We're going to start with that one to begin with, because that's going to lead into the next ones, right? That's going to lead into the next one, number 2 here, which is going to be making sure that we're keeping our balance sheet updated. And so once again, the balance sheet is pretty much just a snapshot in time. You know, you can look at a balance sheet on November 15th and maybe on October 15th, and they're going to be completely different just based off of that time frame, based off of when those bills are coming in, or maybe when the invoices are going out and all those other things that happen in a balance sheet. If you're keeping everything updated, it can change a lot. And so the big thing there is just it's a snapshot in time. So we want to do our best to be consistent. And obviously we need to keep this up to date, right? Like everything else that we're going to be talking about. But the big thing there is to keep that consistent. Now, looking back, you know, when we talk about a balance sheet, we want to make sure that we're updating that as often as possible, ideally once a month, right? To make sure that we can keep track of that on a month-by-month basis. But the big thing here is also to make sure when we're facilitating our balance sheet, or kind of making sure that our bank has the information that they need, the balance sheet that's updated to them, we want to acknowledge also, because it is a snapshot in time, when is our banker always looking at this? Making sure that we're keeping this consistent. And generally, I'd say a lot of times people are trying to do that at, say, you know, December 31st, right? Calendar year basis, or maybe it's a fiscal year. If you've got a different fiscal year, we want to make sure that we're analyzing this on the same time every year. So that way, you know, we're kind of looking at things similar from just a cycle standpoint, from when your cash flow standpoint, making sure that we're kind of looking at this at a consistent time frame every year. So the reason that we're talking about this now is generally a lot of people do that at the end of December, December 31st, right? Making sure that we're kind of keeping that up to date balance sheet as of that point so we can come back and look at it and see once, okay, what did it change much? Did it go backwards? Are we improving? Are we building equity? Are we losing ground? What does that actually look like? And so with that snapshot in time, with being able to keep everything updated, we're getting to that point. We're getting to the point where most people are going to need to have everything updated. So once again, making sure that we're trying to do our best to update that ahead of time versus waiting till the last minute, versus waiting till we're past that date and trying to update everything from last 6, 8, 12 months of the year, right? And so that's the big thing here. Now, with the balance sheet, a couple things that we really want to hit on. So that way we're not forgetting about anything, right? Because there's a lot of things that can fall through the cracks, or maybe you've never been very good about putting a balance sheet together. Maybe you don't even have a way to keep track of a balance sheet yourself. Maybe you're just relying on the balance sheet that the banker gives you at line of credit renewal, and you don't understand it. You're just saying, he's like, hey, keep these numbers or fill in these numbers. What's your updated crops? What's your updated acres? What's your all this stuff? And you really don't understand it. I do have some previous episodes diving into the balance sheet, so a guy can kind of go back and reference those. Can't remember exactly which ones they are, to be honest. That's my bad. But when it comes to some things that we need to remember, trying to build out that balance sheet yourself, trying to make sure that we're staying organized so we have all this information at our fingertips, a couple of those things that tend to be forgotten about or tend to be hard to calculate, going back to, like I said, keeping our books updated, is some of those like kind of a different accounts. Okay, so what's the different bank accounts that you have, making sure we're updating those. What's your line of credit at, making sure that's updated. And we want to do this, not to, like I said, take a step back, but when we updated our books, trying to be consistent, say our QuickBooks is updated, for example, and say we've updated that for the end of November. So we're taking all of our bank statements and we're updating our books as of, say, end of November. Okay, and so when we're doing our balance sheet, we want to try to do this at about the same time, right? Once we get our books updated, then we can come in here and update our balance sheet. Okay, so we can see as of the end of November, our checking account balance was at this, our line of credit balance was at this, all right? And so from that point, we're also going to go back to our accounts payable and accounts receivable. These are two that change so often that we need to really be keeping dialed in. So once again, we've got our accounts payable. Okay, so those are ones that maybe have not cleared the account yet, because if it's cleared, maybe we had an invoice that came in for fuel, right? So fuel invoice came in and we paid it already. Well, that's going to be going back on November, right? So that's not accounts payable. That's transactions done and gone. We don't have to worry about that, okay? Because that came out of your checking account or came out of your line of credit. So we're not going to worry about that. But maybe it came in for this next month. We got fuel bill that's coming due this next month, okay? That's an accounts payable, something that needs to be paid within the next 30 days or in basically a current liability there. Same thing from an accounts receivable. Maybe you did a lot of custom work and maybe you've got yardage due for cattle that you're custom feeding or just something or another that we've got an accounts receivable, something that's going to be coming into your account, but you have not received it yet. That transaction has not gone through. Or maybe it's sitting in your desk, but you did not deposit it until, say, after that first of the month or after that period where you're reporting this, right? So that's where we want to make sure that we're really keeping track of those because they change so often. And a good kind of side note reminder here when it comes to the balance sheet and why we need to update these numbers is, let's take the accounts receivable standpoint. Maybe you're doing some custom work. Maybe it's custom drilling, custom combining that you did this fall, or maybe you're custom feeding cattle, right? You've got expenses that went into that, all right? So the odds are, we're talking about November, right? So maybe you had the fuel bill that went out or the repair bills that went out or all those things that went into that work that you did for somebody else, right? So that's coming out of that account. You're going to update your numbers for that. So maybe you got a fuel bill that you'd paid that was $10,000 or $5,000, whatever it was. So you had that bill that came out of the account. You decreased your checking account, or maybe you increased your line of credit. So there's a change on your balance sheet from that standpoint. So we need to make sure we have something to offset that change. So if I had a $5,000 fuel bill that went out, but I did $10,000 worth of custom work, I need to make sure I'm showing that as an accounts receivable to make sure that that's offsetting that. If we don't do that, that's where things get really thrown off. And it's really hard to gauge the operation, right? When we don't keep track of all those little things. So that's the importance of why we need to keep track of all those little things and make sure that we're lining up timing wise to make sure that we're not forgetting about anything. So the next one here is going to be crop and feed inventory. Hopefully by this time you've got everything combined and into the bin. Maybe it's in town, you know where it's at. And maybe you've sold some of that in the harvest season, in the fall, you sold it out of the field, or maybe you've got it stored in the bin. This is where we're going to keep track of that crop and feed inventory once again at that time, at that date. All right. So maybe you sold it, but you deferred the check, or maybe you sold it and you just haven't received the check yet. So that'd be a really prime example there. And this happens all the time where things just kind of cross over. Well, there's a couple different ways you can do that. But the way that I prefer to do this is, say you've got bushels of corn in the bin, or in town, I should say, that you already sold. But once again, you haven't received that check. You sold it maybe November 20th, right? But the check, it hasn't come in the mail yet, or maybe it has come, you just haven't had a chance to get it into the bank. All right, so if we're updating our books as of the end of November, we're going to go ahead and take that off of crop and feed inventory and take that actually as accounts receivable, because there's a big difference there with a check-in that you have in your hand versus grain that's in the bin, okay, or grain that's in town. There's a big difference there, and a big part of that is actually not, like I said, not to get too into the weeds, but a big part of that is how the bank sees this. So that's why we're trying to make sure we categorize things properly. So that's a big one there is crop and feed inventory. What do you have in the silage pit? What's all there? What have you made for bales? Maybe you made a bunch of corn stalk bales. You've got all of your alfalfa bales you brought in, just keeping track of all that information there. The next one here is going to be just kind of switching categories. All right. So now we're getting to the point where we're, from a cropping standpoint, hopefully we've got everything in the bin. We're starting to focus on 2026 already. We're starting to prepay those expenses. So now we've got, say, investment in crops and prepaid expenses. Those two might seem pretty similar to you, but the difference there, once again, is how the bank sees those. Okay, so prepaid expenses would be, okay, I prepaid my fertilizer for next year, but I have not applied it. But maybe I prepaid some fertilizer and I have applied it already. I've got the maybe an hydrous rig going, I've got the dry spinner going, I've applied some of that already. So that would now be investment in crops. The bank is going to be looking at those differently. It's a lot harder for the bank to go back and repossess or get back their money from a fertilizer that's already spread on the field versus a fertilizer that's just prepaid for at the co-op. So that's the biggest difference there. Just to keep moving here, we got basically any changes to intermediate assets or intermediate liabilities. What did you buy that you forgot about? Maybe it's just kind of a post hole digger. Maybe it's something small that's only couple $1,000s worth, maybe it's $500, and those things tend to add up. Let's just make sure we don't forget about those. And then even sometimes going back at some point or another, and once again, trying to be consistent when we do this, is updating the values of all of those assets, right? All the equipment is generally the biggest category that we have on our balance sheet. So making sure that we're updating those values. All right, did you put an extra 1,000 hours on the tractor and we need to actually decrease that value, right? We need to make sure it's depreciated a little bit. Maybe it's a tractor that holds its value. Maybe it's a John Deere 4455 that holds its value. We don't need to appreciate that much. Making sure that we're being realistic and honest with those equipment values is really going to matter a lot. But then also same side is it maybe on the liability side. Maybe you've got some term notes that you've been paying down on that we need to decrease that, basically outstanding balance or that principal balance that's left on that note. So those are the things that we're trying to update. Same thing with the long-term assets and liabilities. The long-term assets, we're talking about maybe real estate or land or buildings. I wouldn't necessarily change that a lot because sometimes it's nice to be a little bit conservative on there, making sure we're not basically appreciating our balance sheet based off of the number that's just changing on paper, all right? There's a fine line there as to when to actually update the asset values, but the liability side of things is maybe you've made a couple big land notes or maybe some long-term note payments, you've made those, so we need to make sure we're decreasing that. So that change, that cash that was used to make that note payment came from somewhere. Either came from your cash account, maybe you even used your line of credit to make that payment. But either way, it came from somewhere, and that change needs to be accounted for on the balance sheet, but so does the decrease in that principal balance on that liability. So that's a lot of things that comes to that we need to keep in mind when it comes to updating the balance sheet. Spend a lot of time on there because there's so much to really focus on there when it comes to the balance sheet. Now, shifting gears to the tax planning, the thing that we all love so much, planning for taxes. And so, once again, a lot of things that we talked about ahead of time is keeping our books updated, updating our balance sheet. That's really going to play into the tax planning side of things. And when it comes to tax planning, there's so many changes. And we're starting to round the year out from 2025 to focus to shifting on 2026. We got the revenue that's coming in from the crop that we raised or the cattle that we're selling, everything that we produce. But now we're also prepaying expenses for next year. And there's so many moving parts, right? So many moving parts, which is generally why we tend to wait till like the last minute. We want to make sure we know everything that's through and done and all that other stuff. So one of the things that when it comes to the tax planning that really helps, that's really effective in being progressive and planning ahead is going to be an actual cash flow, actual and projections from a cash flow standpoint. Now, a lot of farmers don't have the ability to actually do that, have a way to sit down and do that, don't know actually how to do that. All right. But that's one thing that we can look at to actually be proactive to making sure that we're keeping track of all the cash flow that's gone through our account, all the transactions. But then once we can actually project what's going to be coming as well. And that's the next thing here is to make sure we know what's for sure going to be happening. Okay, I for sure know I have to prepay this expense or I have to take care of these bills, but maybe I can push this bill off till next year. I don't have to prepay that. So just knowing, what needs to be done for sure, whether it be income or expense, what's something that can maybe be held off, and kind of knowing the differences between those, because that's going to help your accountant say, okay, we need to bring revenue in, or we need to hold off on expenses, or we need to get as much expenses as possible. That's going to help from a tax planning standpoint. And it's, what can kind of be moved around and what can be actually flexible there. And side note here, paying taxes is not always a bad thing. The first thing that farmers try to do is, what's our tax liability? How can I reduce all of our taxes? And generally, we need to shift that mindset to where we're first going to focus on being profitable as much as possible. Then we can start to worry about the tax liability. And I do mean the tax liability. Having to pay taxes to somebody else, paying to Uncle Sam, federal, state, whatever the case is, that is a liability. But we tend to focus so much on that that we forget about being profitable, right? Well, how is this? I can purchase this and this is going to decrease my taxes. Well, we got to acknowledge what's actually taxable versus non-taxable. So lots of things to really consider there, lots of things that we want to keep in mind. But let's first focus on being profitable and then we'll worry about taxes. There's so much we can do from a tax standpoint, and a good accountant can keep you from paying as little taxes as possible. But at the end of the day, we want to make sure that we're being profitable. Then we will worry about that tax liability. But making sure that we're planning ahead, making sure that we know everything that's coming down the line. And let's not wait till December 25th or December, that week between Christmas and New Year's, to do all this tax planning ahead of time. Let's get into our accountant's office or talk to them ahead of time and say, hey, this is what we have so far. All right. Update our books, update our accounting system. This is what we have so far. Where are we sitting? And from there, now we have the time. Now we've got this 30 days. We've got at least some notice in advance to go ahead and try to figure out, okay, do I need to move this extra couple loads of grain? Do I need to take that check this year versus next year? Do I need to maybe look at selling calves this year versus next year? Do I need to prepay these expenses? Maybe I've got all these ideas going in my head that I want to do for next year, but maybe I should actually wait to have those expenses onto 2026's tax year, right? So lots of different things that we can really look at there. So making sure that we're not forgetting about that. The next couple ones here, not going to spend a ton of time on here, but talking about number 4, this is prioritizing tasks. Because like I mentioned so far, I spent a lot of time on those 3 ahead of this one, right? But there's a never-ending list of things that we need to do. There's so much to do both outside and inside. And especially when we get into December in the Midwest anyways, we're very limited on the days that we have for good weather to get things accomplished, to spread manure, spread fertilizer, to focus on next year, to keep the cattle pens in shape, to get the calves weaned, get the corn stalks fenced off. We're very limited on those days. So there's so much to do outside, but also what we just mentioned, like we're talking about today, so much to do inside as well. So much to accomplish in the office, taking care of the bookwork, updating the balance sheet, creating that tax plan, and everything else that needs to be done. There's so much to do on our to-do list. Even though harvest might be over, we all think that's when things slow down, and maybe they do. But usually, my famous saying is, once harvest is over, that's when the real work begins. And so this is why when it comes to time management and task prioritization is so important, because there's so much on our to-do list. Let's just take a little bit of time at the beginning of the week or at the beginning of the day to prioritize our tasks. So we're not getting sidetracked or not just focusing solely outside in the business. And while that stuff is important, and I understand the urgency there to get that all done before the weather changes, let's make sure that we're not forgetting about these things, because that's usually what happens is we focus on that stuff and that stuff solely. And all of a sudden, it is that week between Christmas and New Year's, and we are falling behind. We feel overwhelmed and stressed out because of everything that needs to be done. And with that same token of prioritizing our tasks and task management and time management, let's make sure that we're not getting squirrel brain, because this is what happens so much. Or maybe we've got a little bit of time and maybe we're caught up outside, or maybe we got a rain day or snow day here in December, and we're thinking about next year. Oh, I want to do this project on our planner. Let's look into that and spend all of our time on that. I want to put a side dress rig together. I want to do this, that, or the other thing. We get squirrel brain, shiny object syndrome, get so distracted, and all of a sudden we forget about the things that need to be done because maybe they're not as fun. Maybe they're not something I want to do. Maybe there's something I don't know how to do. So we put those things off and focus on things that we want to do or maybe adorable and maybe give us a little bit more excitement, right? And so that's where prioritizing those tasks can be very helpful. Last one here is going to be building that after action report. And we're going to be learning as we go, which is always a constant, right? This is something that we always need to be doing, always need to be mindful of. And what I mean by that is, okay, we've gone through 11 months of 2025 already. As we get into the last month of 2025, let's acknowledge, what went well, what could have been better, what could have we done different to help reduce that stress that we're feeling right now, to reduce the overwhelm that we're feeling right now and everything, maybe the anxiety, what maybe could have been better. Let's acknowledge how we're feeling right now and what maybe could have been better. Maybe we could have actually implemented a good accounting system. Maybe we could have been consistent with it. Maybe we could have used some sort of system to update our balance sheet and cash flow throughout the year so we're not trying to do that at the last minute. What can we do to ease that workload right now? Once again, that's going back to, like I said earlier, let's make sure December is a good time of month that we can enjoy and we can be present with the kids when we're at their Christmas concert or we're starting to focus on fall activities. Maybe get little kids into wrestling. Maybe we've got all these family events. Let's make sure that we can do everything to be present. And if you're not, that's fine. Guess what? That's human nature. That's farmers. That's what we're all are. We're all trying to get just a little bit better. So that's kind of this last note here that I really want to mention is because we don't always have the time to take a breath and acknowledge what could have been better. If I don't like the situation that I'm in right now, but I don't do anything about it, that's my own fault. So if we acknowledge what could have been better, I don't like that I'm all stressed out right now and freaking out about the taxes and all these prepaid expenses and maybe need to bring in a bunch of income. I don't have time to haul a grain. I'm not going to get in time or just whatever the case is. What can we do different so we're not putting ourselves back in that position for next year? Let's try to do the best we can to improve on that, right? So as we get to rounding this out, as we get to closing off this episode, the big thing here that I've mentioned before is just how can we be proactive? How can we be proactive, which is always better than being reactive? Whenever I think of the word plan, I associate that with being proactive, right? If we can plan ahead, we can be proactive, that's always going to be better than being reactive. Whenever I think of the word reactive, I think of chaos. I think of stress. I think of anxiety. I think of things that I don't like, right? And so how can we do our best so we can be proactive in all these different areas? And then lastly, here's what can we control? I mentioned that before. Control the controllables. Control what you can so that way we can ultimately gain a lot of clarity and confidence back into our business, back into our abilities as farmers and ranchers. Gain that clarity and confidence back into everything that we're trying to accomplish and the life that we're trying to build and the legacies that we're trying to maintain, right? So that's the big reason I want to focus on all these things. I was rounding out this episode. That's the big ones here. And by the way, if you do need help with this is exactly what we help folks with Pioneer Farmer and the farmers and ranchers that I work with across the Midwest. I'm just like you because we're trying to do all these things in our business as well and trying to help farmers and ranchers implement these proactive plans, make sure that we are once again focusing on the accounting system, focusing on the books, updating the balance sheet, creating that tax plan, prioritizing our tasks and building that after action report so that way we can do better, learn and grow from everything that we're trying to go through. Creating that pioneer mindset like we're all trying to do and kind of building that mindset to be resilient as well. And so if you need help with this, reach out to us. We definitely love to have that conversation to see how we can help you work through the everyday challenges that we face as farmers and ranchers. But folks, that's all I have for this week's episode, and we will catch you guys next week. Thanks for tagging along with me today as we sharpened our mindsets. If you've gained insight from today's episode, be sure to take a screenshot to share or send this episode to somebody who might also find value in it. For more, follow me on Instagram @GarrettRuskamp or on Facebook, and join me next time for more conviction through clarity.